Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bullish scenario where we expected another drop to the downside to put in a low for wave 2 or wave B before then continuation to the upside in a wave 3 or a wave C. We are then more locally looking for a 3-wave corrective structure in 2 or B, either an ABC or a WXY, with an ABC being a 3-3-5 wave structure, so you then expect this to be a wave 1, 2, and now continuation to the downside in a bigger wave 3, or we are looking for a WXY, which is a 3-3, and then another 3-wave structure in wave Y. If we look at the support areas, then currently price is bouncing on the 29k support area that we already identified a while ago, acting as a little bit of support. But what I think would be nice as well for potentially the low of C or Y is one support area lower between 26.8k and 27.4k. If we then go to the medium time frame bearish scenario, then locally over here the high of a wave B is in, and we're going to be looking for a bigger wave C to the downside in an ABC expanding flat, which is a 3-3 and then a 5-wave move to the downside, where this is then a wave 1, 2, but we get a much bigger 3, eventually a 4 and a 5, where the most common target for wave C is between the two 1.618, sitting between 23.4k and 22k. If I open these support areas, you can see that this area, the target area for C, has confluence with my additional support between 21.8k and 22.6k, which is very nice indeed. The only thing that isn't too nice about this scenario though is the length of this wave 4 in time, as this wave 4 over here is 11 times longer than this wave 2 and it is 4 times longer than this wave 3, which is quite unusual, which therefore at the moment as it stands gives more probabilities to the bullish scenario. If we then zoom in to the low time frame scenarios, starting with this impulsive scenario to the downside, we are then looking at a continuation to the downside. So we then have a wave 1 or wave A, wave 2 or B is already finished, and then we have another wave 1, 2, and now continuation to the downside in a wave 3, where usually a wave 3 is the highest volume, most impactful wave towards the downside. As it stands now, this move to the downside over here had this much volume, which you can see is lower than we had in wave 1. And that is important because if this is a wave 3, you want to see volume increasing to the downside and not being lower than wave 1. But in this scenario, if we are looking for targets towards the downside, then the target area for a wave C is again between the 1 and the 1.236, taken with the trend-based fib extension from the high to the low of A to the high of B, sitting between 28.1k and 27.5k, just above this support area that I already mentioned, around the 27k area. If we look at a wave 3, however, in a potential 1-2 continuation in a 3, you want to see lower prices. Most common target for a wave 3, or usually the minimum target, is the 1.618, sitting at 26.6k. More locally, we were looking for this gap to be filled over here, as I can also show you with a screenshot from my previous video where we said, hey, filling the inefficiency, the gap going towards that 786 area, the order block, for then a potential short scenario over there. Of course, no financial advice in any of my videos. You guys know that we are on YouTube, right? So, but at least it was part of a plan. And then if you see what you want to see over here and it fits your entry requirements, your plan, your strategy, a potential short over here could have been taken, which of course was or is a very nice short position. The gap over here is now filled. This is then the high also for a wave 2 in this scenario, and you want to see an impulsive continuation to the downside. What has to be said is this wave 2 over here hit the 886, which is a rare target for a wave 2, but it is a common target for an ABC, for a wave B. So this is something we have to keep in mind for a potential continuation to the downside, or this being a 3-wave structure. And this being a 3-wave structure is exactly what this scenario shows, where this is then a 5-wave in a wave A, followed by a 3-wave in B, and then continuation to the downside in a wave C in a 5-3-5 structure, where in this particular scenario, this is a 3-wave structure in an ABC 5-3-5-wave move to the downside, where the most common target for wave B is between the 1.236 and the 1.38. Rare target is the 1.618, but as we already know, we had some extra support over here, and what I mentioned in previous videos is this most common target area of B is right above the 29k area. So of course we can expect price to at least wick inside this area, maybe then close around this most common target area of B for continuation. As it stands now, price wicked in the area, closed around the 1.38. So yeah, so far both of the scenarios are still in play. But if we look at how high this retracement was and we look at the volume of this second move down, at the moment the probabilities are a little bit higher for this particular scenario. Doesn't mean it has to play out, but based on the retracement hitting the 886, which is rare for a wave 2, for then a bigger 3, but common for a wave B, and the fact that if we are looking for a wave 3 to the downside, you want to see higher volume than in a wave 1, currently, this scenario is definitely on the cards and something we have to take into account. And what is also nice about this scenario, honestly, is that we then also take the highs that we have over here, but more about that in a second. If we look towards targets towards the upside, then the double top is a minimum at 30.4k, but then we have, of course, the support area over here till 30.6k, but also the one further up, which might be very interesting, between 31.1k and 31.3k, as we then also fill this inefficiency, this gap, hit this area over here, and then move towards the downside. If we go to the micro scenario and zoom in a little bit at what has been happening over the weekend, as well as this drop to the downside, we were looking for this to happen, a move to the downside to take the double bottom, move to the upside to take the double top, which then followed by, of course, this scenario around the 786, where then we were looking for that move towards the downside. So move up, take the double bottom, take the triple top, eventually became a triple top because of the high we got, reach this area over here around the 786 and the 1 hour order block, and then a move to the downside. Very, very nicely traded over here, a nice trading range as well. For then a move to the downside. So that's very nice. And now trading psychology wise, this is interesting. We now caught all the lows that we still had remaining. All the lows over here, quadruple low, one could say, even this one has been taken. So the potential longs that were generated in this range have most likely all been stopped out now. But we do have a triple top, 1, 2, 3 highs. And it would be very attractive to, before moving to much lower prices, take out the shorts that have been shorting inside of this range. Would it be so easy for the short positions here to just go short, put their stop loss here, and move down and be in profit? Well, potentially, right? Because we don't know what price is going to do. But actually, personally, I think it would be very nice from a trading psychology point of view to stop out all the shorts, take the stop losses over here that are positioned above these highs, most likely, maybe even go up to 31k before then the real move towards the downside begins. And that then, of course, plays hand in hand with potentially this scenario over here, where you take the highs and then the move actually happens. If we go to the micro scenario and I zoom in over here, we were looking for this being a 3-wave structure. Again, wave B hitting the 886, right? Rare target for 2, common for B, A, B, C, where the most common target for wave C is between the 1 and the 1.236 trend-based fib extension taken from the high to the low of A to the high of wave B, with the 1.618 being a rare target, which kind of got tapped. I mean, it missed out on a few dollars, but okay, you know, the support is here as well. But nonetheless, the 1.618 is still a wave C target, and we have seen it more often in the past couple of weeks that this can be the target for a C before then a reversal. For wave 3, this is a minimum target and we want to see continuation. Now, as it stands, price hit the support area. So the move towards the upside, as mentioned earlier, or continuation down, we're pretty much at the exact level that is going to decide what scenario is most probable. But then again, based on the 886, based on the volume we have at the moment, another move up would be very attractive, and at the moment has a little bit higher probabilities. If I have to give a number to it, it's probably 60-40 at the moment. But what I prefer to do as a trader myself is to not catch knives. Now, this is personal, right? I'm not giving any advice. This is no financial advice whatsoever. But personal as a trader, I don't catch knives anymore. I've burned myself a lot in the past. It happened a lot, like lost so much money trying to catch the lows or the highs. What I currently look for is to wait and see and give price some time to form some waves, give me some more information, and then I, as a trader, will maybe engage with the market, right? It all depends on what price is going to do, and maybe I'll be looking for a long or add to short, whatever it is. But I prefer to wait and see what price is going to do, give it a bit more time, and then eventually, based on new information, new knowledge, I can engage with the market. That is my way of trading. I also know people that literally snipe the low over here based on their strategy, but this is the way I trade. If we look at the CVD, well, everything is neutralized over here locally. So therefore, again, like, you know, you can give price a bit more time, maybe market structure changes, bullish CVD, whatever you're looking for, because CVD now already played out. We had bullish CVDs played out, we had bearish CVDs played out. So yeah, CVD, it's so powerful, man. Both of these played out. We have news coming as well this week. Here's all the times in Central East European time. We have news on Wednesday 8 p.m, Thursday 2:30 p.m, and then on Friday also at 2:30 p.m. So very important. It might be a very volatile week, which would be amazing. And then finally, the probabilities of the different scenarios in this video. Well, on the medium time frame, the bullish scenario is still the one to look for, in my opinion, the higher probability one, at least, because I give probabilities based on the Elliott Wave scenarios. So the more bullish one, for preferably a bit more downside eventually, for more lower targets before a move to the upside. If we go to the low time frame scenarios, well, as mentioned, at the moment, the probabilities are a little bit higher for price to move to the upside, purely based on what we have now, the moment I am recording. The 886 being hit, rare for 2, common for B, and the volume of this move to the downside over here is lower than the first structure we had to the downside. And in a wave 3, you want to see higher volume, right? So based on those two particular elements, the probabilities for this scenario is a little bit higher. And then on the micro, well, it's simple. I just want to wait and see what price is going to do over here to give any probabilities to any micro scenario. Again, I want to give price some more time, let it develop some candles, some waves, and then eventually, you know, we'll see what happens and give some more probabilities to potentially low time frame micro scenarios, right? So this being said, I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And again, you saw how powerful it is. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.